Alright, let's go over the review of the SPY. Left hand side is daily, right hand side is the hourly. Basically, the wave chart with volume and price as a percent, and the other side is the same, percent and volume. So, the market goes up on 1,300 million shares over here, and it's just hugging. It tagged the top here, but it didn't break. And this is why I'm saying that a lot of folks are calling for a reversal. You go on YouTube or whatever, they all have these videos saying, oh, there's a reversal, it's confirmed. Based on what? Based on what? Like you could see the hourly did not make a lower low, did not make a lower high, lower low. In fact, inside here, it's making a higher low and a higher high. So this is what I'm saying, is that these runaway markets, especially during bullish times, be very careful. What we learned is shorts are being handled, for the last 8 years, they've been smoked. So just have to be careful. Since quantitative easing, like I remember shorts were, I don't know. Anyway, so it goes up on 800 million, down on 300 million, and up on 1,300 million. Yes, there's a lot of effort here, but there's also a lot of absorption here. So you just have to wait for the reversal. Otherwise, short and trying to catch highs is just dumb. And also, let's examine the volume here. It hasn't even finished printing. So we don't even know if this has been a reversal of a significant amount of at least 3% or something like that. Right? So there's no significant reversal here. What about the individual volume? Over here you had 700 million. Obviously it was climactic, but again, even though a climax, even when you have a climax, you need to have that automatic rally, also known as, here's the thing, some folks call it automatic rally, other folks call it a change of behavior. This is the problem with terminology. All it really is a climax followed by heavy selling or heavy buying. That's it. So I don't see that. I mean, there is on the hourly chart a move down here, and this is heavy. And relatively speaking, you have about 85 million. Prior to that, you have 59 million, 14 million, 9 million, 50 million, right? So, but the market hasn't dried up. So there's no sequence completion. And that's why you have to be careful not to jump the gun. Just because you see a high volume wave doesn't mean it's a climax. There's a lot more that needs to be done, including breaks, like a clean break. There's no clean break. I see high low here, high low here, high low here on the hourly. So be careful of all the shit you see talking about confirmed reversal until it happens. And it might happen tomorrow, I don't know. But until it happens, you can't say it happened. Anyway, so it goes, let's take a look at the hourly. It went up on 254 million, down on 85 million, then picked up on 26 million, down on 38 million, and then picked up again on 41 million. So we see that here was less volume, here increased a bit, but then it picked up on 41 million. So yeah, I mean, demand is still there. Like, this is a print. Look, 41 million. It's still there. There's no break. There's no low, nothing. Anyway, moving on. Indexes. What's going on with the indexes? Rest of the indexes, again, this is the IWM going berserk. Other markets, there's the mid-cap still going. Qs still going, making a higher high. And the S&P 100, OEF, also OEX, based on OEX, S&P 100. So you have large cap, tech, mid cap, small cap. That gives you a complete picture. And you see strong higher high, decent mid cap higher high, tech slightly higher high in terms of, here, slightly higher high, and large cap higher high. I don't see any signs of bearishness for reversal. Moving on. So where is this strength coming from? That's the question. You need to understand where this strength is coming from. All right. So what you see here is technology is absorbing over here. It hasn't reversed. It's a little bit dullish, so I don't really know the details on it. All I know is that the trend is up. It rallied, barely pulled back, and is going to test this high, this prior high here on the XLK. On XLE, look at the relative strength. It's almost 19.18. It's very high. It's very, very high. So the strength that's moving the market is coming from the energies. The oil stocks must be flying, and the other is the finance. So oil and finance bullish and are leading this market. So your banks, your oil stocks, technology, it looks like it's ready to just blast off, but I don't know yet. These two are confirmed. I mean, you see clear rallies up here, one up here, barely moving down. Other thing is the industrials. I don't know. This thing again. Why isn't it pulling back? It's just going sideways like that. It's almost like it's hinging, ready for an explosive move up. So if we don't know who's the next one up, but it seems like this industrial's barely pulled back. So just wait for it, like not to have expectations, but instead being prepared. Here, communications also barely, and let's see, XLK is actually weaker. Communications is stronger. It has more relative strength, and XLB, they're all strong, but I mean the key pressure is coming from the energy stocks and the financial stocks. Anyway, moving on to, did I do the indexes? I did the sectors. I think that's enough for today. The idea here is, or the takeaways are, one, don't say it's a reversal. At least see the reversal on a lower time frame, because you're just going to fool yourself. Markets, they're very difficult to predict, so you just wait for it to happen and then be able to react, but be prepared. Other thing is the pressure is coming from energy and financials. So here, for example, you have a rally about 5%, pull back, and another rally of 15%. So 15% in 6 days. Do you see any pressure on the downside? I see 5%. That's not a lot. So this is very, normal over here. XLF, this is appealing to me because they broke out in this area, and I guess it seems like it's trying to test or something, but just keep your eye on this, on both energy and XLF, and really look for which stocks in both sectors are leading the market, and if one stock leads, which ones are potentially going to follow. The others, I don't know, XLU seems weak. XLRE, real estate. This also I'm not too sure about, because it looks like there's a very nice base here. You see a rally here of about 20%. Look at this base, right? However, I don't anticipate, so I want to see I want to see a break. Anyway, thank you all. Bye.